How you doing, everybody? I hope you're all doing great. Stock Option Sniper here. Just real quick, I want to thank each and every one of you that are subscribed to my channel, that are constantly showing me so much love and support, watching my videos, sending me messages saying, "Hey, this is the trade I took. This is the trade that I took today based on watching your video, and it worked for me. I learned something. Thank you so much. You guys are very, very welcome for that. I do this for you guys. And last but not least, I also want to thank each and every one of you for purchasing and supporting my merch products. We have three different type of logo. I know some of you guys love the green hoodies right here. For the woman is the purple. And yeah, you guys, I just want to give you guys a quick shout out. Also, if you are purchasing my merch, since this is a week of grand opening for the next entire month of October, if you have purchased, send me the receipt on my Instagram. The Instagram is on my bio. If you guys show me the receipt, I have a huge surprise for you. So do that on the Instagram and just send me the receipt. So today, let's get right to it, right? Also, if you're part of my community, we had such a great trade on NVIDIA today. We definitely, I called out that NVIDIA was going from 122 to 126. It was sitting on my demand zone. Whoever caught and took that trade, shout out to them. I think there's three of you guys. But I did take a SPY. I was in profit for a little bit. I had a SPY right here, and it broke even, and the market just decided to rip. So that's part of the game. I forgot to put on another negative -1 right here. You guys know if you're in my mentorship, right? You guys know why I do this. So we put a -1 here. So I took three trades today. One was three trades. One was NVIDIA, and two was my SPY. I had very tight stop losses, so it wasn't a huge deal. My NVIDIA gains was huge. But today I want to go over a very important topic, and the topic is called letting it run, right? Letting what run? So basically, I don't know if you guys heard before. Let me go to one screen just real quick. I don't exam. So right here, right? I don't know if you guys ever experienced before that the stock was going like this, and you'd be like, okay, it's going down. I like calls, and you literally hold the stock, and it just keeps on running and running, and then you get out here, and it keeps on running without you for like an entire weeks, right? Weeks, and you're like, wow, I should have held. Only if I held. Only if I held. I could have got a better I could have did 200% on that play, right? So today I'm gonna share with you guys a strategy to not confuse you of getting out your plays early and knowing where the exact target is and hitting your target, right? So how does this work? Well, basically, if you guys seen the video of my golden goose, is not up yet, but the golden goose, if you are in my one-on-ones, if you are in my Patreon, the community, I dig deep into this, the golden goose method, where understanding where you are, right? So you go to a higher time frame, understanding where you are. People right now is currently trying to short Exxon, the retail traders, because they don't understand. All they seen was a supply zone, so they're shorting it, and those who shorted probably getting stomped out of their trade. Now they're going to keep on shorting it, but we're extremely, extremely bullish on Exxon. I literally called this out in my other video. It was yesterday, right? October 2nd, I said Exxon was going to take out, starting from today, right, from yesterday, Exxon was going to take out this new high. Literally, Exxon was sitting, I think it was, what was it today? What was Exxon sitting at? Well, it was like 83, and look at it, it's 91. It was just beautiful play, right? So if you guys have that, we're extremely bullish on Exxon, but I don't want to dig deep into that. That's for my mentorship, and I don't want to confuse anybody because we're gonna need about 2-3 hours, like I do with my clients. But if you look at the golden goose method and you understand where you are, if you understand where you are in the market right now, we are literally in a super uptrend on Exxon, right? Right now, Exxon is ready to run, ready to go to the moon, whatever you want to call it, right? So if you are holding Exxon in the upside, great for you, because right now we're looking to take out this 104.55 and create new highs on Exxon. So what's this method of letting it run, and how does this affect, or what does Exxon have to do, or all that, right? Well, first and foremost, you need to understand where you are in your current time frame. In your current trend, right? Because you have to understand, sometimes we confuse time frames, but if you really dig deep into your trading methods, we do not trade time frame. We trade price action, right? We trade the price. We are smart money traders. We understand that the higher time frame, I showed you guys on that method, right? I've only been talking about this since forever, right? I teach you guys structure. Once you get that structure, you get that in the form of SND. Once you get your SND, let's say in a weekly time frame, right? Then you have price. You're in a week, you're charting the daily or the 2 hours, right? In a higher time frame. Once you get that, you guys know this if you are a part of my mentorship. I don't want to keep saying mentorship because you guys might think I'm promoting, which I really don't care if you're part of it or not. But we do have traders that are killing it. First day they learn this, right? Kid you not. So we have our structure. We find our SND. We wait for price to come up there. We wait for the confirmation of transfer from weak hands to strong hand in a base of Wyckoff. Excuse me, guys. Somebody's texting me. Right, we wait for that transfer of confirmation. If you know the rules of 30, you know where that is. So if you're in a daily, so you're gonna go about to 8 hours. We don't have 8 hours, but if you are in the 2 hours, you go to the 5 minutes, right, to get that proper entry in the time frame. And once you get that entry in a lower time frame, that's when you let your plays run. Let me go back to that. So what does that mean? You let your plays run, right? When you let your plays run, hang on, guys. I'm trying to get this perfect visual for us, right? So what you're going to do is once you get that form of Wyckoff, a confirmation of that UTAD, that test, and goes down lower, right? As you guys know, when you have that structure, we have the protective high, right? If you're in puts, we're gonna take that from the bottom of that structure, and what we do is we take that entry, we take this entry right here, stop loss right above the UTAD, right? And we take it all the way to that structure. Our entry, UTAD, right? And boom, we just let the play run. So what does this mean? Well, a couple things can happen, right? Right? We like to trade high RRs, but low risk, right? We're risking very low. Usually what I do is put my stop loss 15, 20 cents, and that's it, right? To some people, that might even be a lot. But I put my stop loss usually 15 cents. I tell my students the same thing, 15 cents, 20 cents, right? So when I do that, I'm risking very little to make at least a huge RR on my plays, right? So look at this. You have from 91 to 67. I'll let that run. But you have people who don't understand the market, who's who's getting out their play early when they wish they would have held longer. So we let it run. Why? Because once we have the structure, once we have the SND and the confirmation, and we have understanding of the trend based on the golden goose, we know that we're gonna start liquidating. We're gonna start liquidating all these lows, right? In this scenario. So scenario in what? We have prices going like this. Okay, I don't know why this is right. Okay, let me just end it here. So once we have that, let me go to another price, guys. I'm sorry for some apparent reason. Right, so we have price going like that, and we have price going down. It's not letting me go to the other side. It's weird. Right. So anyway, we have price going down. I don't want to stress over nothing right here. So we have price going down. Then we have individuals saying that, hey, listen, if you've been in my mentorship, you understand that if you did get your entry here, if you have your entry here, it would be nice if I can show you guys. I don't understand why it's doing this. So if you get your entry here, let me see if I can do it. It's just not letting me move my drawings here. It's weird. There it is, right? So you go like that and you take the price lower. Okay, it's doing it. So we understand that these lows need to be liquidated. If you are in puts, okay? If you're in puts, right? These lows need to be mitigated. But people who don't understand the trend keeps on saying, nope, that's my demand zone. That's my demand zone. It's gonna bounce from there. So therefore they got a perfect entry but got out early. Then they look at the price again and boom, it drops even lower. Like, wow, only if I held that. Only if I held, that would have been 300, 200% on my account, right? But they never understand liquidity. They never understand that certain price needs to be mitigated, and that's why they don't need to worry when they have all the rules and criteria that I teach you guys from the beginning of this video, right? When I started trading smart money, because the beginning of this video was all indicators and stuff, right? So once you guys understand that, you're not scared, right? So for example, we have Disney. Disney was a great example, right? We took a Disney put. We also have Moderna, but Disney was a great play. Oh, I'm already in Disney. Okay, so we have here Disney. I'm gonna take this out. I'm gonna take out everything. I was showing my right here. So I was showing all my students here. I had a mentorship. I was showing my students here that we to retail trader, they're looking at this like, oh wow, this is a demand zone. Well, first we're to start here, right? They shorted it, they're making money, they're good. They got out early the moment the demand zone touched it. Good. They made a little money. As you can see, it pumped up a little bit, but overall the trend was still down and it kept going down. So these people that shorted here, they're happy. They be like, oh, it's a demand zone. Okay, I gotta get out. Next thing you know, they it pumps up a little bit, letting them think it is a demand zone, right? So what happens? Boom, break like butter. Insane, right? This thing ran, the price ran down through this demand zone like nothing. You guys see it right here, literally, like nothing. Like it didn't even exist. Why? But me understanding this now, we can see that this lows needed to be mitigated, and that's when smart money starts to confuse retail traders, or dumb, I don't want to say dumb money, but retail traders who don't understand trading the way how the smart money trades, right? So what happens here? Well, basically, as you guys can see, the price just keep running down to every single demand zone. Why? Because these lows had to be liquidated. And what does liquidation mean? It means where does the most order lies in the market, right? If you don't know what I'm talking about, I have a video right here. Liquidity market step by step. I show you guys in detail everything you need to know. So go watch that, right? So we have here that needs to be liquidated, and right now Disney from 97 is looking to liquidate this 97.07 level, right? Just like people think Disney was not gonna come all the way down here at this 120 level. Look, Disney is at 120. Disney was before, I think, trading at 203, right? Next thing you know, we're running to these lows. Why? Because if you understand, these had to be liquidated, right? Liquidation meaning where does the most order lies in the market. What does that mean? Well, basically, when the composite man was in this play, in order for him to create this spring, they had to pump the market so much in the opposite direction, and then left all that position, bought another. They had to get so much of their. What am I trying to say here? I know what I'm trying to say, but it's not coming out properly. So basically, they got so much position on puts on the downside, making people think that we are going all the way down, but it was just enough to put the market down to break the structure. If you don't understand the Wyckoff, right? I have a Wyckoff video. I Not that. I have a Wyckoff video breaking that step by step, right? Somewhere here. Wyckoff accumulation, because there's two type of Wyckoff: is the accumulation and distribution. So we have the price trading sideways, creating this spring. Once we create that spring, we have that sign of strength, LPS, last point of support, and boom, just running, right? Then reaccumulation. People think, oh, okay, we're going short, we're going short. Once you go, it was just an accumulation to go even higher, right? So it was an accumulation to go higher, and people was like, what the hell just happened, right? So that's what happened here. So the composite man now has a lot of position on puts, and they're down billions, right? Negative 10 billion on puts. So what are they doing? But they're making trillions of dollars while taking this market up. So what they have to do is they have to liquidate all that position going all the way down here in order to break even on that plate, right? And then they're going to do the opposite, right? They're going to, once we liquidate everything here, they're going to do the opposite. Now, retail trader are so confused because now they're like, whoa, hang on. This right here is a supply zone. This right here is a supply zone, right? You guys, I hope you guys are understanding this. I hope you guys are like, wow, that's insane. This is a supply zone. This is a supply zone, right? So wherever there's a huge downfall, there's a supply zone. I'm not saying they're wrong. I used to trade like this, but those who do not understand price action, right? They're definitely getting confused or smacked around by the market, right? Look at that, running through this. It's a supply zone. It's a supply zone. Goes down a little to go even higher. It's a supply zone. It's a supply zone. Boom, go down even higher. It's a supply zone. It's a supply zone. Go down even higher. You're like, what the hell is this? And they're just forcing the market to go short and short, and the market is going long and long. Why? Because when the composite man made all this huge down move right here to create this UTAD, they opened up so much position, and they're now down billions on that position. Now they have to get all this liquid, they have to liquidate all these highs right here in order for them to break even on that play, and they're going to do the same thing over and over. Now we're going to go back low, and they were like, what happened? This was a demand zone, this was a demand zone, then we go up, oh, this was a supply zone. I want to teach you guys a quick trick that I learned. The composite man meaning the person that is on the other side of the screen, right? He's the person that controls the market. The composite man thinks the opposite of the retail trader, right? As you guys can see, retail trader thinks this is going to be a supply zone the moment this starts to come up, right? But the composite man is looking at this as another demand zone to go even higher. What do I mean by that? So he's looking at this to do this, right? So the price is here, so we're gonna go like that. Oops, wrong one, right? It's gonna go like this. Whoop, higher. Whoop, higher. You guys see that? He's just using those zones that you created to become supply to go even higher. And now you're confused as heck. Like, what the hell's going on here? This went down the previous 2022. Now everything is, for some apparent reason, nothing is holding. Why is that? Right? If you guys understand, there's so much imbalance in this market, and those imbalances need to be mitigated in order for those balance to get filled. Imbalances to get filled, right? If you don't know what imbalance is, I have a video on imbalance right here. It literally came out just 10 hours ago. So check that out, you guys. So letting your plays run. When you understand, in order for your plays to run, you need your market structure. Like I have a Moderna play here, right? I had an amazing play on Moderna. Shout out Moderna. Oh, I deleted it? No, I didn't. Beautiful, right? See, three things we're looking for. We're looking for, this is called the sniper strategy, right? We're looking for the structure, SND, and the confirmation based on the Wyckoff. So we had Moderna. Where did I get Moderna at? I think it was here. I can hold up my zone. Oh no, it didn't. It didn't touch it. It would have been a beautiful entry right here. From 135 to 121, we'll take that. Hang on, guys. I'm looking for that. Usually I chart in the 2 hour. Oh, it was this. I missed that. No, I didn't take that play. So I had a Moderna play, and I let it run. Right. I had a Moderna right here. I had a Moderna play right here. My stop loss right here. This was beautiful right here. It was on the 28th, right? It was on the 28th. I was in the 2 hours. I put my stop loss right above that UTAD, as you guys can see right there. See? A long wick. I was like, this got to be the UTAD liquidating all these highs. Liquidating all these highs. So I said, hey, I'm taking that. Put my stop loss 50 cents literally just right above that. And what did I do? I took my entry, went on my 5-minute rules of 30. If you understand that, right? Go watch my video. Right, so once I got that, I had my setup, went to my 5-minute, took that entry. Once I took that entry, confirming the weak hands to strong hand transfer, I literally just let my play run. So it was from 126 and took it all the way down to 115. And how did I know it was a 115 bounce? Because when I went to my time frame right here, that was one on my target right here, that 115. Right there, you guys, perfect. Where is that at? Right there, that 115. So I said, listen, I'm out. I'm not risking it. I had two contract. How much RR? I forgot how much RR that was, but it was a pretty great trade. I did about almost 300% on that play, you guys. Right, from 126 to 115, I just let it run and run and run. Right. So if you guys, I hope you guys see what I'm talking about when I say let the plays run. Right. I started minimizing my time screen a little bit more, and look at this, you guys. Right. I let that run. My target wasn't even here. My target was lower. It was literally a 115 before I even had all these things. Before I was taking re-entry, I thought it was gonna go down even lower, but it was fine, right? And eventually, if I am still holding this play, it did went back up from 120, but overall I would still be up on this trade, right? But I already sold it. But overall, I would still be up, right? I had like 3 weeks out. two contracts. It wasn't a bad trade at all, guys. So that's what I'm saying. You let the plays run. I teach my student a lot of things where if you guys are working a job, this strategy is perfect too, right? If you're scalping, it's also perfect. So once you find your structure, once you find your SND, and once you find, let's say this is where you trade at. That's that confirmation. So you have your structure, you have your SND. All you can do is literally set alarms, right? You create an alert. Boom. So you have an alert. Let me take this out first. Right, so you have an alert the moment the price goes up here, because all you really want to get that short confirmation is the moment the price touches that. And once the price touches that, now you're waiting for that confirmation of Wyckoff distribution. If you're taking it lower, and then boom, you take that, and your price target is the low of that structure, right? So what you can do is you set alert right before you touch it. And guys, I want to share something with you. Sometimes price will do this, right? Sometimes price will do that. Barely touch your zone and runs without you. Sometimes price will even go all the way up from your zones and go down without you. That's normal, you guys, right? The only thing you can do is put risk management in your trades. That's what makes it. That's what's going to make it a great trade. Sometimes your trade, you're gonna miss three zones, right? What do I mean? So you're gonna have. Let's look for that. See, like right here, you guys, I would have had a perfect entry at that 135 level. Beautiful entry, right here, right? I would have had a beautiful, perfect entry right there if it touched my zone, but it never touched my zone. And it made sense. That's why I had the other alarm there. This is not there. I deleted the other alarm. It was around this area when it touched this zone, as you guys saw that I delete. Right? It would have been perfect, but what happened? It didn't touch it. What do you want me to do? Right? And then if I recreated my structure in the 2 hour, it would have been much better because it would have given me a clean play. It would have given me a clean play right here. Boom. Right? Once I seen that in my 2 hours, create that as a SND, wait for price to touch on that. And I'm not just saying that because I know right here it gave us this play, right? But in general, you will miss plays like this. Your price will not hit. Price will go above your zones, and you're gonna be like, what the hell? My strategy doesn't work. And in reality, it does work. You just have to be patient, right? The composite man, the person on the other side of the screen that I'm talking about, he wants you to get emotional. Why? Because he wants you to FOMO into a trade. Once you FOMO into the trade, you start fucking up and you start getting sloppy with your trades. Now you start to lose everything. Now you start to tell yourself, no, my strategies don't work. Now I gotta learn another course. And this course shows you another strategy. Nope, it doesn't work. Learn another course. It becomes a whole pattern. I'm gonna share a great example with you guys of what I'm talking about here. There's a gentleman, right? His name is Paul Tudor Jones. Paul Tudor Jones is one of the CEO of Tudor Investment, right? So this gentleman had a very simple strategy. The strategy is a breakout strategy. Breakout from what? It was the 200 MA breakout. So basically, when the price goes above the 200 MA, he would long the stock, and when the price goes below the 200 MA, he would short it. So he was featured in the one of the biggest news outlet, the Bloomberg outlet, right? The Bloomberg News, yeah, Bloomberg News, and they were like, "Hey, Paul Tudor Jones, how did you know the price were going to that direction?" And you know what he said? He said, "Well, what you guys do not know is that I shorted the stock 4 times, and I lost all 4 trades. I shorted it the fifth time using the same strategy, and the price fell to the fucking face of the earth." Right? So basically, he didn't change anything. He stuck to his method. He stuck with his strategy. He didn't say, "Oh, what's another strategy? My strategy doesn't work." He tried it 4 times. And some of us get so discouraged because our play is not given to the direction that we want. But in reality, we just have to wait and be patient, right? And that's why if you ever heard the saying before, trading is all mindset. Trading, you have to be patient. All these things are true, right? You have to be disciplined. All these things are true. That is not a lie, right? You do have to be disciplined. You do have to set a boundary of rules for you not to get sloppy with your trades, right? I've missed so many trades that I literally said that, damn, I would have made so much money. I would have been financially set the entire month. I didn't have to trade for a month if that entry that I got from that trade was amazing. But what can I do? I can't do anything but stick to my trade and go find another setup. Market is open 5 days a week. That's what I'm missing. I'm missing that. I'm being very emotional, right? I'm being very emotional. Now I start to become sloppy, FOMO into a trade that I wasn't even supposed to get into, right? I have to preach these things. I know it's not a, it's, I have to preach these things because, guys, this is very, very important, right? Some of us have a great strategy, but we don't see it play out the first time. And, we get discouraged and switch to another strategy. Like, you don't need any more courses, to be honest, right? I'm not saying you don't need to learn, but it's like, stick to a strategy. Go find a strategy that works for you. Master it. Apparently, the smart money way just works for me, and I love it, right? So that's our lesson for today, you guys. I hope you got a lot of value to it. Send me messages, comment, and subscribe to my channel, you guys. I'm dropping so much more videos. I didn't want you guys to see it. That's why I deleted the other tab here, because I had like 8 other videos that is going to be uploaded, and I want to surprise you guys. But guys, literally check this video out. All the videos that I've been putting out is a compounding video. It's not all over the place. You in order for you to understand this, you must watch the previous videos, right? So it's a step by step. So that's why I wanted to make this very, very clear from the beginning that I want to create a certain education stepping stone where they have to watch this video to understand this video to understand the next video to understand the next video. But anyway, you guys, this is called Let the Play Run. If you've stayed this long, thank you all so much. Once again, and those who are supporting me from every journey of the way, thank you all so much once again, so much. Let's continue to message me, comment, let me know what you think, and have a great day, guys. Peace.